So welcome to this class. So today we'll learn about share market. In the previous class, we learned about calculating compound interest in the previous lesson. And I ask you to complete the whole questions from exercise 9.2 and from the miscellaneous exercises. I hope you have completed all those questions. So let's start with the lesson share market. So by studying this lesson, you will be able to identify the stock market and its nature, identify terms related to the stock market, calculate the dividends gained by investing in the stock market, solve problems related to shares. So most of you all would be familiar with the word share or share market, which is a form of earning income. It's kind of a business field. So let's discuss deep into what this share market is and how the dividends and how these stock market works in Sri Lanka. So in this lesson, we will consider businesses in Sri Lanka which are incorporated companies registered under the Companies Act number 7 of 2007. These companies may be owned by an individual or a group of individuals. Of these companies, the companies which are limited by shares can be classified as follows. Private limited companies, public limited companies. Public limited companies raise capital to commence or continue their businesses by issuing shares or debentures to the general public. The public is notified regarding the issue of shares through the media. When the public buys shares, they have the right to sell these shares to others. The stock market is where the trading of these shares occurs. So when companies are created in Sri Lanka or when they are formed, according to the Act number 7 of 2007, private limited companies and public limited companies can commence with issuing shares or debentures. So for public limited companies, they issue shares or debentures to the general public. So the public are notified. The public is notified with through the media, and the business process goes through in that way. The stock market is where the trading of this share occurs. The stock market. Stock exchange is a place where securities such as shares and debentures issued by companies are traded. The Colombo Stock Exchange, CSE, is the organization responsible for the operation of the stock market in Sri Lanka. The Colombo Stock Exchange is licensed by the Securities and Exchange Commission of Sri Lanka, SEC, to operate as a stock market in Sri Lanka. The SEC regulates and oversees the stock market. Companies are admitted to the official list of Colombo Stock Exchange as listed companies. On April 21st, 2015, there were 297 companies listed in the Sri Lankan stock market. The public who wish to buy or sell securities in the stock market must register with one or more of the 15 licensed stockbroker firms of this Colombo Stock Exchange who attend to the transactions. Some brokers offer trading through the internet. The stock market is the place where these buying and selling of the shares take place. So Colombo Stock Exchange is the organization which is responsible for the operation of the stock market in Sri Lanka. So it has received the license by the Securities and Exchange Commission of Sri Lanka to operate as a stock market in Sri Lanka. So Securities and Exchange Commission of Sri Lanka regulates and oversees the stock market. Companies are admitted to the official list of the Colombo Stock Exchange as listed companies. So there are 297 companies according to April 21st, 2015, listed in the Sri Lankan stock market. The public who wish to buy or sell securities in the stock market must register with one or more of the 15 licensed stockbroker firms of the Colombo Stock Exchange who attend to the transaction. Some brokers offer trading through the internet. So the trade can also be done through the internet, but the trade should only be done with the 15 licensed stockbrokers firms of the Colombo Stock Exchange. Shares. Public limited companies which are listed in the stock market that wish to raise capital by involving the public do this by issuing shares. A share is one of the equal parts into which a company's stated capital is divided. So say this is the capital amount of the company. So it can be divided into parts, equal parts, called shares. So each of these parts has an equal value. The share is one of the equal parts into which a company's stated capital is divided. When a company issues new shares, the price of the share is decided by the company itself. The public can invest in as many shares as they like. An investor who buys shares in the company becomes a part owner of the company. The stake he has in the company is proportional to the number of shares he owns. So when a person buys shares from a company, he becomes part owner of that company. The more he buys, the more shares he buys, the more proportional that he owns the company. So to understand this further, consider the following example. An investor buys 10,000 shares from the 100,000 shares issued to the public by a certain company. Then the investor has a share of 10,000 over 100,000 in the company. Let us express this as a percentage. So the company has 100,000 shares, out of which 10,000 shares were bought by an investor. So to find the percentage that he owns, the ownership of the company, we multiply 10,000 over 100,000 by 100%, which gives 10%. Therefore, the investor has 10% ownership of the company. Example 1. Company C, which has a stated capital of 10 million rupees, issues 100,000 shares to the public at 100 rupees per share. Vishwa buys 5,000 of these shares. Express Vishwa's share in the company as a fraction, as a percentage. Find the amount that Vishwa invested in company C. So the number of shares issued by the company is 100,000. So to find Vishwa's share in the company, the number of shares Vishwa bought is 5,000. So Vishwa's share in the company as a fraction, 5,000 over 100,000, which is 1 over 20. So that is as a fraction. And as a percentage, 1 over 20 multiplied by 100% gives 5%. So 5% of the whole capital of the company is owned by Vishwa. Now find the amount that Vishwa invested in company C. The price of a share is 100 rupees. The number of shares Vishwa purchased is 5,000. So therefore, amount Vishwa invested is 100 rupees times 5,000 shares, which is 500,000 rupees. Dividends. When a listed company issues new shares, it gives notice of the benefits that shareholders will enjoy. Dividends are payments out of the earnings of the company, which some companies give their shareholders as a benefit. It is expressed in terms of the amount paid per share. This is paid out quarterly or annually. So investors who buy new shares from a company, they have the benefit of getting dividends. So that is a part of earning, which is paid quarterly or annually. For example, a company may pay its shareholders annual dividends of 5 rupees per share. The company has the right to change this amount with time. So shareholder is the person who owns the shares. So let's consider the example one. Company C pays annual dividends of 4 rupees per share. For the 100 rupees shares it issued, of which Vishwa bought 5,000 shares. So each share cost, the value of each share is 100 rupees, and Vishwa has bought 5,000 shares. And the company pays a dividend of 4 rupees per share. So find the annual income that Vishwa receives through this investment. So the number of shares Vishwa has bought or Vishwa owns is 5,000. The annual dividend per share is 4 rupees. So therefore, the annual income is 5,000 times 4 rupees, which is 20,000 rupees. Express Vishwa's annual income as a percentage of the amount he invested. So the amount that Vishwa invested is number of shares times the price of one share, which is 100 times 5,000 equals 500,000 rupees. So Vishwa's annual income as a percentage of the amount he invested. So the annual income that Vishwa receives is 20,000 and he has invested 500,000. So therefore, 20,000 over 500,000 times 100% is 4%. So 4% is the annual income that he receives as a percentage of the amount he invested. So now do the following exercise pertaining to the facts on initial investments in shares. So put the heading Chapter 10 Share Market. Write down these 4 points. The companies which are limited by shares can be classified as private limited companies and public limited companies. The stock market or stock exchange is a place where securities such as shares and debentures issued by companies are traded. A share is one of the equal parts into which a company's stated capital is divided. An investor who buys shares in a company becomes a part of owner of that company. The stake he has in the company is directly proportional to the number of shares he owns. So the more shares that he buys, the more ownership that he gets. Next, let's do exercise 10.1. So an investor purchases 1000 shares of value, rupees 25 per share in the company, Sasili Apparel. How much did the person invest? The number of shares the investor purchased is 1000. So the value of one share is 25 rupees. Therefore, the amount the person invested is 25 rupees times the number of shares, that is 25,000 rupees. If the company pays annual dividends of 4 rupees per share, find the investor's annual dividends income. So now the annual dividends income is given per share, which is 4 rupees. So the annual dividends income for all the 1000 shares is 4 times 1000 rupees, which is 4000 rupees. So next, complete the rest of the questions 2, 3, 4, 5, and we will discuss the answers for these questions in our next class.